Okay, what's up, traders? I'm here with a special guest today. Bit of a unexpected, I would say, live stream. So I hope that everyone is watching and joins us, or is rewatching this, enjoys it as well. I'm looking forward to this. We should have done this quite some time ago. We were just discussing the back end. I've already read Mark's book, and I've actually been quite a few times on Mark's live streams, particularly on Instagram. I don't know, Mark, if you remember that you always used to go live, and I actually quite often join your live streams. And quite often, actually, Mark used to, I don't know if you still do it as often, Mark, but post your, you still do, post your cartoons, and I used to save them, a lot of them on my phone, which I've still got, and I'm actually going to bring up one today from that's I've got saved on my PC since like 2021. So yeah, Mark, it's great to finally have you on, and if you can just introduce yourself, and I think we're going to have a good chat.
Yeah, thanks a lot, James. This has been fantastic to finally connect after a bit of a hiatus there. So, my name is Michael Lamothe. I've been trading for about 26 years now. Man, gray hairs, all that's match my shirt. Anyway, the first 10 years were an absolute nightmare. I made every kind of mistake that people typically make. Underestimating the markets, trusting the wrong kind of people, thinking that the way to win is through massive diversification, loads of time, getting the pros to help you. And I took all my money, I put it into mutual funds. This is in the dot-com boom. And I started out doing well. And then when I graduated from college in 2002, found out that I was down 20%, and I cursed myself, I cursed them, and I took my money home, went and I cried. Then several years later, made some more mistakes, found this guy, Jim Cramer, started to listen to his advice. And it sounded good at the time. Study the companies, understand the story. If the market starts to go down, but the story hasn't changed, his thought was that the market's throwing you a sale, so you should buy more of that. I learned the hard way that sometimes when a stock goes down, it just keeps on going down. It blew up again. And then several years later, now we're in about 2010, 2011, I discovered William O'Neill. He wrote this book, How to Make Money in Stocks. He has this methodology called Can Slim. He also made a newspaper called Investors Business Daily. I don't know how many people might know this stuff, but basically, his approach was to go back in time, see what worked on the biggest stocks in history, right? So your Amazons, your Googles. One of his first trades, was this stock called Pick and Save.
Sure.
And, one of the things that he noticed was that things just repeat themselves, the same kind of patterns, the same kind of fundamentals that lead to outperformance. And so he came up with his methodology. And I studied that, found other people that were also studying a similar style, made my own, and started to have some success with that. And because of that, here we are today.
Yeah. And Mark's been on the Day Trading podcast, I think about 2 times. I was on one of them. And, Mark, you mentioned that you've been trading for 26 years. I'm 26 right now. I turned 27 in August. So, you got a lot of experience, So I always appreciate talking to guys that have a lot more experience in this game than me, because I've been doing this relatively still new. I've only been doing this 7 years. It took me about 2.5 years, my side, to start to see any form of success. And then, I think, though, would you say that right now it's a lot easier than your day to actually start to get into trading and find some form of success, because there's a lot more resources now? Would you say that's fair?
Yeah, I think that's fair. There's more resources. The cost of entry is dramatically lower. When I first started, transaction fees were about $15 per trade. So 15 to get in, 15 to get out. That in itself knocks out a lot of people, right? Because if you're just starting out with a couple of $100, you can't move in and out of the market. You would if you're trying to swing trade or something like that, or a day trade, the transaction fees alone would eat up your cost.
Yeah.
So cost of capital. I would think that it's a double-edged sword, though, because, well, one of the things that when you lower the barriers to entry so dramatically, people almost have a lack of respect for trading, where that
True.
they just open an account, they think that it's easy, and people learn the hard way that this game is a little bit more difficult uh, than they might think. And
Yep.
that's one of the reasons why I wrote the book, The Trading Mind Wheel,
Yep.
to give people a firsthand look at what they're getting themselves into.
I love it. And on that note, I mean, I've picked up Mark's. I've picked up Mark's book literally the day he basically launched it on Audible, and we can actually show it up here on screen. So this is Mark's book that he's written. As you can see, I've got it here on Audible, very, very neat book. There's 8 things that Mark speaks about. Maybe we'll touch on a few of them, but I think the one that I remember from the book, if I do remember absolutely correctly, was like the limiting beliefs. And I think a lot of the time when I was first getting into trading, you get told this quite often by, maybe family members or friends that, trading is gambling, or, you can't do it because I wasn't able to do it. But they actually just portraying their beliefs onto yourself. And, I think trading, like any career, it deserves utmost, respect and dedication to your craft. So maybe we can just chat about this. Today, we wanted to speak about a little bit more about entries and executions. And I know this is something that we were chatting about on Discord, Mark, together about before going live here. What compromises or what composes of better entries and executions? Let's start there.
All right. So for better entries and exits, well, the first thing is that they should be pre-planned. And they should be pre-planned based on something that actually works, right? So a lot of people will come up with a plan, and some of them will even follow through and execute that plan. But does that plan actually, is it based off of some sort of a system, some sort of a strategy, something that's been proven to work, not just once, but over hundreds of trades? Have they taken that step to figure that part out? For most people, myself included, when I had first started out, the answer was no, right? And you think that you're doing research because you're studying and reading articles on the internet about some company, and that's good, but it's not something that's going to lead to long-term profitability, because there's not a true edge. You want something that's going to give you a true edge, where if you execute your strategy 100 times, 1,000 times, it's not where you hope, but that this will put more money in my pocket at the end than what I started with.
Okay.
And that's how you have that confidence.
Yeah, I agree. When you have confidence in your plan. Now, for those that don't know, Mark swing trades more equities, right? Mark, only equities, or are you looking at crypto, anything else like that, Mark?
Every now and again, I'll have crypto when it's setting up in the proper way. For the most part, though, 98.7% of my trades are stocks.
Stocks and any are you any of the actual indexes itself, like the NASDAQ or the S&P?
Yeah, every now and again I'll use the leveraged ETFs for those. So like TQQQ, or if I'm trying to short, perhaps SQQQ or SDS for the S&P.
Yeah. Oh, and the option, are you trading these as option plays your side, or physically buying the shares itself?
Great question. I'll do both. So I have an account where I'm dedicated to just trading the stocks, and then I have a far more aggressive account where I'll swing trade, short-term swing trade, and sometimes those short-term swing trades end up being day trades in a separate account. I find that by having these accounts segregated, it makes the planning and the management process a lot easier than trying to just do everything in one account.
Yeah, I like that, because kind of like you split it up. You kind of have like an account just for shares and you focus on that. And then you got the maybe more aggressive account where you play the options plays, and that could even be some day trades. Okay, so what are some things that, like, your side that you are using for better entries and executions? What are some tips that you can give the viewers?
Sure. So multi-timeframe analysis is important. So when you're I think that this is important for whether you are a position trader, a swing trader, a day trader, even if you're a scalper. It's very helpful to know how the chart is lining up across multiple time frames. I find that trades tend to work better when I'm trading with the longer term trends, even if I'm only going to be in the trade for a couple of days or a few weeks. And the reason for that is because you have the bigger players, the major institutions of the world. They're not going in and out of stocks like you and I can. They'll build a position over time. So if we see them piling into a position, and you're able to see it right there on the chart, and maybe we'll take a look at a few charts in a little bit, but their footprints are undeniable. And when you see them starting to pile in, then what I like to do is to ride their coattails. And there's some proven methods to be able to do that. To be able to do that with lower risk, higher potential reward, and that's what I like to do.
Okay, let's get right into it there. Let's get up your charts here, and let's bring up maybe you can speak about a few plays right now, because obviously current market conditions. What's your take on current market conditions? We've seen the Nasdaq, the S&P, both of them kind of trading at 10% of all-time highs. Maybe the Nasdaq even a little bit more, because obviously a little bit more volatile. But we are seeing a pullback, and if I'm not mistaken, I was actually looking at this today. We are trading below the daily 200 EMA on all major indexes for the first time since about October 2023. So what is your take on current market conditions, and what could we see, maybe for the next couple of months? What are you seeing?
Well, let's see here. So on my charts, I've got the daily charts up right now. I've got the S&P 500, the Nasdaq, the Russell 2000, New York Stock Exchange, Dow, and this is also the IBD 50 right over here. The reason why I like to have that one up is because it's a fair representation of growth stocks. That's mostly what I trade. And taking a look at these charts right here, they're all below the, well, not all, but most of them are the S&P, Nasdaq, the Russell 2000. They are below the 200-day moving average. Like you had mentioned, the Dow is also below the 200-day. The IBD 50 is below the 200-day. The only one that's not is the New York Stock Exchange. So when stocks are like this, well, when they're in these downtrends, or even when they're beginning to consolidate within a downtrend, their rallies are suspect, because prices sold off for quite a while. So eventually, when price becomes so oversold, you're going to get a bounce. And when prices do bounce, there's going to be a lot of sellers potentially that are or a lot of buyers that had bought back here. Now they're trapped. Now they're interested in trying to get out of positions. So that creates, well, what's known as overhead supply. So how do you know when overhead supply is going to happen? Well, there's a couple of things that I like to look at. The first is price structure. So I'll go back and let me just zoom in on the S&P 500 over here, make it a little bit easier. So one of the things that I like to look at is price structure. And if I'm looking at prior structure from, say, right around here, let's make this
Mark, I just want to butt in here quickly, Mark. Do you know someone is an old school trader is they have the bar charts, not the candle charts.
Yeah, thanks. I didn't feel old enough. I just learned from O'Neill. Well, when I learned from O'Neill in his book, How to Make Money in Stocks, he just had simple bar charts like this. Just the high, the low, and the close. He didn't even have the open, because the only thing that truly matters is where price closes. And so on something like this, for example, like you see this bar right here, where price pushed lower and then it closed near the top of its range, that's actually a sign of weakness that's being bought. And so that would be a potential reversal sign.
Because it closed above the previous close there, correct?
Right. So it's not necessarily a sign of, oh, let's get longer, let's do something. It's just a sign of, okay, if price does this, I would anticipate a move towards the upside. So
Sure.
if, let's just say, for example, you started to get short somewhere in here. If I saw this, that would prompt me to start to cover.
Yep.
As a signal.
On your position. Sure. It's so interesting. I mean, I know Credelli uses a lot of the bar charts. A lot of guys like using the bar charts. Obviously, I was, brought up in using the candles. Okay. So we've spoken about a few things here. Speak to me a little bit about some of these moving averages that you use, Mark.
Oh, sure. So I've got a bunch of them on here. It might appear a little bit noisy for people that aren't familiar with them. My apologies if that's the case. But the ones that I have on here, I have the 5 EMA, 10 EMA, 21 EMA, 100 EMA, and then this one here, that's the 200 SMA, and then this one here is the 50 SMA. And people might be wondering, well, why do you have all those? Great question. First, the 50 and the 200. Those are standard institutional ones that are used. And so those are my charts for that reason. O'Neill cited them, and they've been there for a long time. Other ones, the 5, the 10, and the 21, there's actually a market wizard by the name of Ed Sakota, and also the 100 EMA. Ed Sakota, these are the ones that he would use. So I thought, great, if he's using them, then they're good enough for me. So I put them on my charts. Now, it's not where I would be looking to necessarily change which moving average I'm going to have on here. So it's not where I'm going to say, oh, well, I've got the 10, maybe the 9 is working a little bit better. So let me look at the 9 on some charts or switch it up to something else. Well, I think that part of where the magic happens, James, is by keeping the same moving averages on your charts, using the same indicators all the time. Because if you're consistent with your setups, then you'll start to understand how price behaves around different indicators that you might be observing. And that's how you'll really start to spot the nuances of what's here. That's how you'll be able to read, well, what's going on and not have to worry about what somebody on X is saying or waiting for something to come out in the news. You're reading the market, and this right here, this is truth. This is what's actually happening versus somebody else's interpretation.
And sure. What's very quite funny actually. Now that you've told me about all these EMAs, I use very similar ones. My mentor Austin Silva, who actually I think wrote the foreword in your book. Is or the preface, whichever one. I know it was one of the two.
He gave a lovely testimonial. He was also the host of the virtual conference that we did a couple of years back.
That you did together.
He stepped in last minute, and I always thank him for that.
Correct. So I remember watching that. That was a couple of years ago now. I do remember that. So he taught me to use the similar EMAs as well. So we are on my charts on my daily time frame. I kind of if I bring up my charts, I actually took a short position today on the S&P 500. I'm trading them as a cash market index, as a CFD.
Nice.
So this was actually my trade here today. And as you can see, I used to have all these EMAs on. Here's the daily time frame. I've got the 200, which is white. I've then got the daily 50, the 21, and the 8. Okay, for my trend. But basically, on the lower time frames where I'm day trading them, I've actually cut down a lot of noise, and I'm only really looking at the ones I'm looking at, like VWAP and stuff like that. So very, very similar what we do use. Something that I also like to use for trend and is the 5-day SMA, Mark, for kind of like some swing, like a relatively like a swing type of gauge to see what the market's been doing over those 5 days. Is that something that that do you ever look at any of those SMAs, like five SMA? I know you mentioned, what was the other one?
I have the 5. I have a 5 EMA.
Okay, EMA. Okay.
Yeah.
Nice. Okay.
Yeah, so it moves a little bit quicker, but I like it.
Yeah, EMA, SMA. I prefer the EMAs for the quicker, the shorter term trades. So speak to me and the viewers a little bit about what would you like to see for kind of like, we're speaking about entries and execution. How do you plan and prep yourself and your mind to make these better executions? Because something that, it was actually quite amazing that when you said, let's speak about executions, because I think that day that we were speaking last week, I had a trade, I believe. I remember it now. I can actually go back to it. This is when you do your daily report cards and everything like that, Mark, you get rewarded because then you get to learn from your mistakes. So if I can actually just find it up here, I do believe it was last week, Wednesday. So it would be Wednesday the 12th. And I had a pretty poor trading day this day. Although, let's have a look here. Okay. Although I made money, I actually had poor execution. So let's bring this up here. Let's remove your screen and get mine up. So this was my first trade over here, and I do my daily report cards, as you can see, every single day. So even though I made money this day, this was from Wednesday the 12th. See how I remember it? Because I'm doing my daily report cards. I liked the longs on the indexes. I liked it for a rally on this specific day. I came into the open and I just completely executed shockingly, to say the least. I bought before, seeing strength or seeing turnaround, and I got smoked, as you can see. And then I was reluctant to pull my trade earlier, and I ended up taking a full loss on this because price just came I was so gung-ho on being right instead of actually executing my plan. And then I actually ended up getting back in later on and ended up finding a nice support zone off that and ended up trading nicely to the highs. Oh, but my execution was bad. My execution was bad, particularly on this first trade, because sometimes we're not going to actually get that bounce for me to actually get break even or green on the day. And I would end up having the sour taste from poor execution. So how can one like me, what advice would you give me and viewers that are, maybe eager to take trades that maybe weren't planned, or not that weren't planned, but like eager to just get into the market? What's your take on that?
Yeah, absolutely. So have you ever heard of this guy? We're almost in baseball season. We were talking about a little bit about baseball earlier. I like the Yankee hat. Have you ever heard of this guy, Ted Williams?
I have not. I can't say I've heard of Ted Williams.
All right. Well, I just switched my screen over. If you want to switch to what I'm showing over here, I put this on my Instagram a moment ago. But Ted Williams is a Hall of Fame hitter for the Boston Red Sox. At his best, he was hitting in the 400s, which is almost unheard of. And the way that he was able to do it was to analyze all the pitches, everything that he would swing at. And what he found out was that if price was in this happy zone here, and I put a little chart over it because I think that the same thing applies for traders.
Sure.
If the ball were in the happy zone and he swung at that, then he would have a very high chance of getting a base hit, double, triple, home run.
Sure.
It was like in the 400s. But if he swung at something that was down here off the plate, then all of a sudden he's a 200 batter. So how can we take this very simple analogy and apply it to trading? We've got to know our stats. We've got to know exactly what you've been doing with your journaling and your post-analysis. But by seeing, what works, what doesn't work, we could start to come up with a playbook for ourselves. And actually, let me pull up
I like that.
the sample that I have.
I like that analogy, Mark. I think a lot of the time, myself, I'm speaking from experience. When I speak about these things, and I speak from my own experience, because I still sometimes make very silly mistakes. So, for example, I think the biggest times when I'm trading at my worst is because I'm actually over trading. Instead of waiting for those very neat entries, I'm just trying to trade every single one instead of actually sticking to my playbook and the ones that make me money and get me on first base, right?
Exactly. So it actually pays quite a bit for us to come up with our own playbook. And so this is a sample of some of the trades that I look for, right? So it has a name, right? It has the time frame that I'm looking at it for. How long should this thing be? How deep should it be? All these kind of details, look and character, market type, etc. So by having something specific that I'm looking for, then it helps to filter out 95% of the noise. Then once I've got those handful of setups on my radar, then it's important to know, which ones are good and which ones are great. So we want to have a mechanism to do that too. So I outlined that here. Boosters, what takes it from good to great? And I have that listed out for all these different setups that I trade. And how are you going to find that part out? It's through that post-analysis thing. You take your winners, you put them in one pile, take your losers, put those in another pile, and then you study the winners. Well, there's going to be things that are common. There's going to be a common thread. And what ends up being the common thread is one of the things that might be the one that takes it from good to great. Then you start to come up with a model book for yourself. You take your screenshots and you start to say, okay, for me, when a pullback looks like this, and I start to see some of the stuff here, for example, the supportive action near the 21 EMA and 50 SMA, relative strength outperforming price, volume on down days declining. Those tend to be the kinds of things that take a stock from being good to great. Something else is the stochastics. I like to look at stochastics. Those are up, but it doesn't, those sort of details don't matter as much as what's in your winning trades. Build your pile, build your stack, go through it, and these things will start to jump out of the page up the screen at you.
Yeah, so I like that a lot. In fact, you know, it's the saying, you know, from a lot of the guys that I listen to, and you know, you've been very instrumental in my trading journey. As I said, I've been following you for many years. But a lot of the other guys, they say Pax. I don't know if you know Pax, for a futures trader, Pax from Twitter. He says, the less I trade, the happier I am. You know, you don't need to.
Yeah, I'd say that.
He said, you don't need to trade every single move in the market. You just need to trade your move. And, you know, there's going to be days where maybe you could sit flat all week, and then all of a sudden that perfect pitch comes in the middle of your place and you can hit it, you know, out of the park. And that's kind of like what we need to be waiting for, is our pitches that make sense for us in trading. I think, you know, over trading and trying to trade every single day, every single hour, you know, can be very obviously time consuming. And I also, just on that note, I just want to bring this up as well. Mark, is this, you shared this on your, you know, your social medias a couple of years ago, and I saved it. And now this even makes even more sense for me, because obviously I've just become a dad, literally just over a month ago. So always make time for what matters most. Yes, we love our jobs and our trading, and, you know, building generational wealth, and, you know, the challenge that trading brings, and you know, all that cool stuff. And trading's the best. I love it. It's the best career in the world. But we also got to make sure that we have time for what matters most, and that's our family, because that's why we got into trading, and to be able to actually do what we want when we want. I remember you also shared another graphic, if I'm not mistaken. You had this like a guy with a Lamborghini and a fancy car, and you're like, I'm not doing this because to buy that stuff. I'm doing so I can do what I want when I want. And you had a picture of the family. So I think that's basically, you know, why we're working hard. And sometimes that means that we actually need to trade less and spend time with our family, and or rather be like, this is not our trade. Let's come back tomorrow, or later in a couple of hours if we're day trading, or, you know, maybe later in the week if we're looking for a swing trade. Particularly in the current market conditions, we are very, very choppy. If we just let's bring up like a Nvidia or a Tesla. We are very, very range bound at the moment. If we just come back here, let's just go to the hourly time frame. I mean, yes, if we have another last rundown, this is Nvidia, but like very, very choppy. We're now looking maybe for a next leg up, but doesn't look like we're actually in like a breakout type of environment at the moment, at least this week.
No, not at all. No, not for Nvidia.
Yep. So let's bring up Nvidia. And okay, so maybe let's also pivot onto some stocks that you're currently looking at, or anything like that you're currently managing. I know, without maybe you know, giving away the golden sauce in terms of like
I play with an open hand. So the secret sauce is putting in the work. It's the kind of stuff that nobody wants to do, right? Like putting in the work, grinding, studying your mistakes, doing post-analysis. It's all that boring stuff that's not sexy. That's the secret sauce.
Yep.
I wish that it were something like, oh, here's an indicator, but no, it's really not that at all. So before I share with you the couple of trades that I'm in, I also wanted to share with you this chart of the NASDAQ here. So you had mentioned earlier about sitting on your hands.
Yep.
I've been sitting on my hands since February 20th, and I only put on trades this week.
Sure.
I moved to cash on this day here.
Yep.
When just before the market started to fall, and it might be like, well, how'd you do that? Was it like some kind of a magic trick or something? The answer is no. It's just using this very simple framework that I've got over here.
There you go.
So
defining the market mood. There you go.
Defining market mood. I talk about this in the book as well. So, well, we need a way to identify how the market's moving, what the stocks or whatever we're trading, what kind of setups are there? Are they quality setups or are they not? Are they plentiful or are they not? And of course, our personal performance, because if we have a system that's pointing us to at least what we think are the best opportunities, then those trades that we put on will be giving us some of the best feedback that we could possibly have.
Yep.
So at this point up here, I was already being forced out of the market. Some trades were starting to stall out. I locked in profits and just moved to cash. And also the other stocks on my watch list were already starting to fall apart. So that had me getting out of the market. And then for this whole leg down, I didn't really see anything that I would consider a quality setup. So no quality setup, sit on your hands and wait. And it's as simple as that. Most of the time, my style is one where I'm treading water for a large portion of the year. And then there'll be maybe 3 or 4 times during the year where it's time to really step on the gas. Like last year, great year. Really made for it in June, October, and November.
Sure.
The rest of the year was mostly treading water. So you don't really need a whole lot. You just need to be in at the right times and know when it's time to sit out.
Yep. That's actually interesting that you mentioned that. I was actually going to, before I've just written a note there, I wanted to go over something, but I was actually going to ask, because I like that you got the green, the red, and the yellow, like the segments of, okay, when is it time to press on the gas, or when's it time to maybe lay off? Are you on your share now talking about, we spoke about you trade the options and the actual physical shares, you buy the physical shares. Are you long only on the shares account, or are you shorting or you're shorting on, and you're shorting on the options accounts? What?
I'll do both, but most of my money is made on the long side.
Sure.
So for the most part, I'll sit out and just wait for a downtrend like this.
Sure.
That's actually it was starting to get close to where this might be setting up for another leg down. In my opinion, just looking at it now, there's a lot more that I need to dive into later today.
Yeah.
But just looking at this, it doesn't look too pretty yet.
Yeah. Okay. So I do want to bring this up as well. Mark, if we just go like this is actually from the trading coach and trader that I respect a lot on Twitter. I don't know if you know Steve. Mark, you might.
Oh yeah. Well, we've crossed paths.
Okay. So this is something that you were just mentioning. He says, in my 25-year trading career, much of the time I was just trying not to sink. In doing so, I would learn how to swim, but conditions would then change. And again, it was about trying not to sink. Then learning to swim again in the new conditions. This pattern repeated many times. And that's just what you mentioned now. Like a lot of the times in your style is that you're actually just trying to not get blown under the, out of the water. You try to trade, and then you'll push on the gas when the market conditions are more favorable. I think a lot of the times as traders, and this is something I've really had to learn in my young trading career, is that I've excelled in certain market conditions, and then when it changes, I was a bit slower to adapt. And that's where I maybe needed to just consolidate and not lose money, rather than, okay, let me sit on cash. Let me not play aggressive in this day trading environment because I'm a day trader. Let me rather, play light and tight rather than swinging for the fences every single day. And that's something I've had to learn a lot in my trading, because not every single day or every single market environment is created equal. Some traders do well in, like I was speaking to a guy who's made a lot of money day trading. He lives maybe 30 minutes from me. And markets are reaching new all-time highs. And he was saying, I'm getting smoked because he says he does well when the market drops off, and then he can look to pick bottoms and get those, you know, like maybe like what we had today. We had a V bottom kind of on the NASDAQ, you know, where we got that V bottom after we get a drop down pre-market, and then he would probably be in something like this. That, you know, that's what he's saying. So the grind higher type of market environment didn't suit him. So everyone trades differently, and I think that's something that I've had to learn, you know, for myself. So if anyone watching that, just because you made money last month doesn't mean you're going to come into this month and all of a sudden crush it again. Market conditions could change. Just like last month, we ended up coming off the highs, and now, as I said, we're trading. This is the NASDAQ chart, the cash index chart. We are currently trading at 11.5% off all-time highs. It's a lot different market compared to this, where you could probably come every single day and look to buy, and you'll probably make money just with a little bit of luck. You know, so. Okay. Anything else on maybe some executions and planning? Anything from the book that maybe we could highlight?
Sure. So I think that a very important concept, especially when markets are like they are right now, a little bit more challenging, is a concept called progressive exposure. Are you familiar with that term, progressive exposure?
I can't say I'm too familiar with it. So please explain it to me and the viewers.
Yeah. Oh, so what progressive exposure means is that you put on it. Let's say that you put on a trade. That trade starts to work in your favor. You take the profits from that trade, and then you use those profits to size up on your next trade. And then as that trade works, let's say that trade number 2 works, then you're able to take those profits and then size up again on the third trade. The reason why this kind of a concept works and works extremely well, I learned this concept from Mark Minervini. He's the guy that wrote the foreword to the book. Right. He's won 2 U.S. investing championships, and he's probably of the people in Jack Schwager's Market Wizards books, he's probably the most well known on today, I think.
Yep.
Outside of O'Neill. So with progressive exposure, you start to scale up as trades are working. As trades stop working, then you start to cut your size down and cut your size down and cut your size down. That way, you're trading your best when you're trading your biggest when you're trading your best. You're trading your smallest when you're trading your worst. And this tends to work out in the markets because the market moves in waves. If your style is working right now, it's likely to start to work for a little while. If it stops working, then it's likely to be either a choppy period, or perhaps you go into one of the drawdown periods like we were just in. I avoided all that partially because of progressive exposure. And now I'm just starting to dip my toes back into the market. And so I'm doing it with very small size. So far, the trades are profitable. I'm waiting to start to lock in some of those profits. And then if I am, then I might start to look to scale up, provided that the market remains favorable and I find more high quality setups.
Sure, Mark, that's actually quite interesting that you mentioned that, because that's actually something I've been doing. I've been kind of tapping into kind of like a flow state, if you want to call it that, in the last 2 weeks, where I've been trading really, really well and learning but something that I've been doing is playing with profits. And I know Crudelli, I'm sure you know from Twitter as well, Anthony Crudelli. He speaks a lot about this, and this is how he used to trade. So let's just say you've got, and this is for the day traders watching out there, not only a swing trading approach, but a day trading approach. Let's just say your max loss for the day on your trading account is $500. What I've actually been doing quite now, I didn't know you call it this name, but clearly I've been doing it. But let's just say your first trade is a winner and you risked $200 on that trade. Well, now you have $700 to play because you've increased your max loss limit from the day, because it's $500 from the start of the day. Well, now I would size up on the next trade. I might risk $500. And if the next trade was a winner, now, and let's just say I made 1R. So now I'm up $1,200 on the day. Well, now I've got $1,200 to play with, and I've only taken 2 trades. And now that's when you start to hit the gas. Whereas like on the losing days, well, the max you can lose is $500. So you kind of capping yourself at the next loss limit, but you're trying to extend the high side on the days that you're seeing it really, really well. And that's something that I've actually been doing when I'm trading at my base. It's something that I do very, very well myself, if I must say, because I look to press when I'm hot. And then when I'm not seeing it well, I'm getting tapped out for my daily loss limit. So that's from a day trading perspective. It's the same it's the same thing. It's just from a shorter term aspect, I'd say, right?
Yeah. That's brilliant. And do you have a cap for yourself for max loss on a day?
I do. Yes, I've got some. technical things in the background that will cap me and will lock me out my account for the day if I hit a max loss for the day, such as like a $500, whatever it is, right?
Yeah, brilliant. So it sounds like you've got the recipe for success right there. You're capping your losses, a maximum loss, and upside is unlimited. Step on the gas when things are working.
Yep.
That's
what is it? If you go to the casino, Mark, they might call it a different. What do they call it? A martingale, where you just double down. That's why the casinos have the max loss limits. That's why casinos actually have a cap. If I'm not mistaken, is because let's just say you went to a red and black. You went to the roulette table. You're going to play red and black. If you put $100 on red and you lost, well, the strategy then is to double up your size and basically put $200 on your next spin, because then you'll get back to break even. Now we're doing it with obviously a much more educated, trading decisions, because it's not a 50-50 or even less than 50-50 if you're playing with 200. So yeah, I like that a lot. That's actually a very interesting. I didn't know that Minervini does. Is this something that you try and employ every single, when you're on a hot streak and you're seeing the market and the market is favorable for you?
Yeah, absolutely. So also brings this back into play, right? Because the whole red, yellow, and green thing. So if I'm seeing the market well, I'm scaling up. I'd want to scale up, but not just on any trade. I want to make sure that I'm still seeing A+ level trades. If I'm just seeing a bunch of B and C level trades, I'm not going to start putting more of those profits into subpar trades. I'd rather just sit on those profits until the high quality stuff starts to show its head again.
Yeah. Okay. No, I like that. If the viewers are finding any questions or that, put in the chat. We'll see. Maybe if you put in the comment section, maybe afterwards we'll get to Mark and we'll maybe do a round 2 or many more of these. But okay. Any last thoughts, Mark, before maybe we wrap it up here, and then I'm looking forward to this. This has been really, really interesting. I've written down a few notes my side and how I can maybe improve my own trading. Yeah, anything that you would like to maybe cover before we wrap it up here?
Yeah, let's see. So are there a lot of part-time traders in your audience here?
Yep. A lot of the guys that I work with are, they'll have a job and they'll trade part-time in order to maybe in the hopes of making their trading their full-time income, or earning another source of income as well,
Yeah, absolutely. So I've got a soft spot in my heart for those people, because that's where I was for so long. And I haven't, when I finally left the day job behind, that was only about 6 years ago. So I had to make my strategies and systems and all that stuff efficient enough to be able to do at night, on weekends, riding the subway home and doing my studying there and trying to do some analysis or reading the paper, what have you. So it's important to carve out time for when you're going to trade and execute. And so many people use trading. To me, trading's fun. I think that a lot of people that get into this, it's fun. It's exciting. Be careful with using it as a form of entertainment. I think that's what trips up a lot of people. A lot of people will pull out their phone in the middle of the day, just check the market. Does that have anything to do with your strategy, your business plan, if you will? If it doesn't, then you shouldn't be doing it. If you want trading to make you money and make you money consistently, you need to treat it like a business. And I would go so far as to have an operating plan, a business plan for your trading. I've got a book like that too that I wrote recently called the Trading Success Blueprint. It's on my website, marawealth.com, if anybody wants to check that out. It'll help you write a business plan for your trading. And a lot of people get intimidated by that. You don't need to have a business background. It's just the basics, it walks you through step by step, all the different parts of a plan, beyond entry, exit, stop loss. You also need to know things like your worst case scenarios. You need to know how you're going to manage a trade, how you're going to manage your portfolio, things like that. And so the book helps you figure that part out and actually come up with a structured plan.
I love that. No, if we can, maybe also I will, if we can actually just bring that up on, is it on your website, Mark?
Yeah. Let me pull up the website.
Yeah, let's pull that up, and then I'd love to show that. So we're going to do some more of these if you've got, if you would like to do some more of these with me, Mark. But I think this has been long overdue, and we definitely should do. I'd love to get you on the channel more often. Do some of these lives because I really enjoy these lives because it's answering questions in real time. Maybe if you guys have enjoyed this, maybe get some comments on Mark's channel or my channel, and maybe we can go over some more things, topics on a second live stream and third live stream and so forth. But I really enjoyed this. Let's get that up, Mark, on your side. Let's get that up there. Let's go like that. There you go.
Yeah. Hold on 1 second.
No worries.
Site is not behaving well just right now, of course. But yeah, later on, if people want to go to marrowwealth.com, they'll be able to find it, or at least start with the Trading Mind Wheel book. The Trading Mind Wheel book is on Amazon. It's available now with hard copy, Kindle, the audio book that you showed earlier, and yeah, I think that's
okay. So that's where the traders can start and catch you. Obviously on Twitter, Michael G. Lamothe, and Instagram the same, as well as your YouTube channel as well, Michael Lamothe, right? So yeah, that's where you guys can find Mark. I appreciate you being on, Mark. I'm looking forward to doing plenty more of these. This has been really, really good.
Yeah, I agree. This has been a lot of fun. Thanks for having me on. Glad to be here. If I could be of service to anybody, just reach out. I'm happy to help.
100%. Okay, cool. Again, if you guys have any ideas or any suggestions for the next couple of episodes or live streams, call them, I'm really looking forward to it because I think Mark brings a great wealth of experience, and again, been trading for over 20 years. That's something that you definitely need to listen to. So put it in the comment section, and we'll see you guys then on the next one. Thanks, Mark, for your time as always.
All right, my pleasure. Take care, everybody.